Welcome to The Explainer. Today, we're diving into a seriously incredible case study on ACV auctions. We're looking at their absolutely market-defying first quarter performance for 2026. If you follow the automotive wholesale space, you know it's been a pretty bumpy ride lately. But ACV? Well, they're telling a completely different story. We're going to break down exactly how they're pulling this off using data straight from their latest earnings reports.
So the core tension we're exploring today is kind of a paradox. I mean, it's one thing to grow when the wind's at your back and the whole industry is booming, right? But it's an entirely different beast to hit record growth while the overall auto wholesale market is actively shrinking. How in the world does a company actually pull that off? Let's jump into the numbers and find out.
Section 1. Navigating a tough auto market.
The contrast here is just stark. Think about it. The baseline for the dealer wholesale market actually saw a mid-single-digit decline. Plus, they got hit by severe weather in the Northeast, which usually absolutely crushes auction volumes. But against those exact same headwinds, ACV delivered record revenue. They grew their units sold by 3%, hitting over 213,000 vehicles, and they grabbed even more wholesale market share. They aren't just surviving a downturn, folks. They are actively taking territory.
Section 2. The Digital Auction Advantage. Now, looking at the revenue mix reveals something super interesting. You might just think of ACV as, a digital place to sell cars. And sure, that auction and assurance piece makes up 57%. But check out that massive 39% slice for marketplace services. ACV's success isn't just about the transaction itself. It's about this really powerful flywheel effect. By attaching transport and capital services to their auctions, they're solving huge logistical headaches for dealers. Actually, their ACV capital revenue shot up 30% year over year, and they delivered over 120,000 transports. That ecosystem is incredibly sticky.
The absolutely crucial metric to zero in on is $542. That represents their auction and assurance average revenue per unit, or ARPU. Even in a really tough economy with the overall market shrinking, ACV still managed to bump this metric up by 6% year over year. They're extracting more value out of every single transaction because, frankly, dealers are more than willing to pay for the efficiency and assurance this digital platform gives them, especially those no-reserve auctions that guarantee a sale.
Section 3. AI and New Tech.
On the recent earnings call, CEO George Chamoun highlighted a pretty massive strategic shift. He pointed out that their AI-powered dealer solutions, specifically a new product called Viper, are gaining some serious traction. The big takeaway here is that ACV's tech investments aren't just, flashy research and development projects. Products like Viper and their pricing tool, ClearCar, are actual drivers of unit economics. They're creating a powerful new driver for wallet share expansion simply by making dealers' lives a whole lot easier. So let's translate that executive enthusiasm into hard operational facts. We can see exactly how AI is changing the game on the ground. Historically, inspecting a vehicle for auction took roughly 30 minutes, but with Viper rolling out, ACV is targeting an inspection time of just 10 to 15 minutes. And get this, for certain clean vehicles, they're already getting that down to under 10 minutes. By slashing inspection times by more than half, they're massively boosting their volume capacity and field efficiency, all without proportionally jacking up their operational costs. It's a real game changer.
Section 4. Q1 2026 Financial Results.
Beating expectations right out of the gate, ACV delivered a 12% jump in top-line revenue. They hit just over $204 million for the quarter, up from $182.7 million the year prior. And remember, this acceleration is happening while the traditional physical wholesale market continues to lag and deal with those mid-single-digit declines we were talking about earlier.
Now, you and I both know growth without profitability is a huge red flag, right? So let's look at their profitability profile. Yes, they do have a GAAP net loss of $10.89 million, but that's largely due to stock-based compensation and amortization. When we actually look at the cash-generating power of their day-to-day operations, their non-GAAP net income hit $7 million, and their adjusted EBITDA hit a record $17 million. That EBITDA number, that is a 23% increase year over year. It proves that their unit economics and disciplined operating expenses are scaling beautifully. Plus, they mentioned that non-GAAP operating expenses as a percentage of revenue actually dropped by 300 basis points.
Section 5. Expanding the addressable market.
Right now, traditional physical auctions still hold on to about 70% of the market share. That is a massive runway for digital expansion, and ACV is going straight after that 70%. They're expanding way beyond just dealer-to-dealer sales and targeting the giant commercial wholesale market. By executing a super clear three-step playbook, landing commercial accounts,
Proving out the marketplace results and expanding wallet share over time, they have made some serious headway. Management noted they've already engaged over a dozen major commercial consignors. We're talking major captives, rental car companies, fleet operators, and auto finance providers. This drastically expands their total addressable market.
Section 6. The road ahead.
Even when factoring in a worse-than-expected macro environment for the rest of the year, they actually revised their wholesale outlook down to a mid-single-digit decline. Leadership confidently reaffirmed their full-year guidance. They're projecting $845 to $855 million in total revenue, keeping that double-digit growth trajectory alive, and targeting $73 to $77 million in adjusted EBITDA. That represents a massive 28% year-over-year growth. They are basically saying to the market, look, it's tough out there, but our playbook is working.
And hey, if you ever want to know if a board of directors actually believes their own projections, just look at what they do with their cash. Signaling immense confidence in their future cash flows and their current valuation, ACV's board authorized a $100 million share repurchase program. Better yet, they announced an immediate $50 million accelerated buyback. When a growth company in a tough macro environment uses its cash to buy back shares, well, that's a very strong indicator of internal confidence. Which leaves us with this final thought. As ACV continues to just completely defy market gravity, slashing those inspection times with AI, expanding into commercial fleets, and driving huge EBITDA growth, you really have to wonder, how long can traditional physical auctions hold on to that 70% market share against this kind of digital and technological efficiency? The data we went through today certainly suggests the tide is turning. Thanks for joining me for this explainer, and definitely keep an eye on how this digital disruption continues to unfold.